Hello. I want to thank all of the people that have just joined. Um, my name is, I know you can't see me right now, but my name is Joetta Talford. I am the, yes, thank you so much for putting that in, Jerrianne. And we are going to get started. Jerrianne Jackson is a realtist and brokerage owner here in South Carolina. She's going to lead us in this home buying seminar along with Johnika Joseph, who is a realtist as well. So I want to thank you ladies for taking the time out. They are real estate agents. We do have lenders here as well as insurance professionals. So thank you guys so much for joining us. And I'm going to turn everything over to Jerrianne.
Thank you so much, Joetta. Happy Tuesday, everyone. Thank you for joining us. I know that it's 6:30 and it's time for dinner, but we really appreciate your time and your energy for this 1 hour. Again, on behalf of the National Association of Realtists, our Piedmont chapter, we welcome you. And I would be remiss if I didn't show you all my earrings that shows Zeta Phi Beta sorority. So I am excited that our brothers of Phi Beta Sigma are in partnership with us this evening. This is going to be a casual conversation. We have a presentation that we're going to go through. But if you have any questions along the way, feel free to drop them in the chat. We will be monitoring the chat, and we're also going to provide our contact information at the end. So for whatever reason, we do not answer your questions today, or if you have another question, then you can reach us after this conversation. So before I get started, I would like to welcome Mr. Tyrone with Phi Beta Sigma. He is going to bring greetings on behalf of their organization. And then we are going to have introductions from all of our guest experts that have joined us this evening.
All right, as Jerrianne mentioned, my name is Tyrone Rouse, and I am the chairman of the Bigger and Better Business Committee of the Theta Sigma chapter of Phi Beta Sigma, also known as the Rock Hill Sigmas. The chapter and I, we would like to thank everyone for taking the time to join this call. We hope that this event will be very informative to you, and I'll give you all of the information that you need for your home buying needs. And we would also like to thank the Greater Piedmont, South Carolina Association of Realtists Incorporated for hosting this event for us. And we look forward to bringing you more events like this in the near future. We really appreciate it.
Thank you so much, Tyrone. And thank you, brothers, for joining us this evening. I'm going to hand it off to Ms. Johnika Joseph for her to do an introduction, then our lender partner and our partner in insurance with Allstate. Johnika?
Technology is whipping my butt today, y'all. Hello, everyone. I am Johnika Joseph. I'm a realtor here in North Carolina, South Carolina, born and raised in Rock Hill. So this is home. I've been a realtor for 10 years, and I just get excited to help people, seriously. So that's me.
Diane, you want to go next to Desiree?
Hi, everyone. My name is Desiree Humphreys. I am a lender with Guaranteed Rate. I have been in the business for about 15 years in all capacities of helping home buyers accomplish the dream of owning their home. It is a passion of mine that I love. I am currently licensed in North Carolina, South Carolina, and adding Georgia and Virginia and a couple of other states. So that's the gist of it all right there.
All right, good evening, everybody. My name is Chelsea Paget. I'm an Allstate agent. I cover South Carolina and North Carolina. Like Johnika, it is a passion of mine to help people save money on their insurance. That's something that gives me, added boost to be able to help people. And so I'm happy to be a part of today's conversation. Thank you.
Thank you. Ms. Washington, you want to give an introduction or you good to go?
Hi, my name is Sahad Washington. I'm a mortgage lender with Guaranteed Rate. I've been in the business over 10 years and I am an advocate for home ownership. Thank you for having me.
Thank you. And thank you all for joining us throughout the conversation. I'm going to call on our guest experts to provide more insight in some of the questions that we may have or some issues that we may want to address would be in their level of expertise. So a little bit about myself before I get started. I'm Jerrianne Jackson, broker in charge of Blue Jay Agency here in Rock Hill, licensed in North Carolina and South Carolina. And this is a passion of mine because when we think about home ownership and when we speak to this slide and look at the average wealth for Black Americans, it is a large difference, enormous difference when we look at people that own homes in relation to people that are not homeowners. So to level set this conversation, I think all of us, we mostly know that home ownership does build economic wealth, but then we ask the question of how do we get to that point? So that's what we're going to cover today in this presentation. Why home ownership is important, discuss the 4 C's of credit. I'm going to ask our lender partners to talk about that. Review the 10 steps of home ownership. That's where we're going to spend most of our time. And then who is your home buying team? When we think about purchasing real estate, there are several actors that are involved. Licensed professionals to help you navigate the process. So throughout this presentation, we're going to call out several individuals, businesses that can help you throughout the process. Again, here's another slide, and I'm not going to read the slides. I'm just going to have them on the screen regarding race and ethnicity and home ownership. So let's talk about the 10 steps in the home buying process. And again, we're going to fly really high level this evening. If you have any additional questions or need additional information, feel free to drop that information, that question in the chat, excuse me. So the first thing, what we want to do when you prepare for home ownership is 1, understand that you're making a commitment to purchase a home. When we talk to clients, realtors, we always have that initial consultation of why is the best time for you to purchase a home right now. And that is a deep question, but you may be looking at purchasing a home because you want financial security for your family, that rents are increasing and you want more stability in your monthly payments. You may have located to the area and you are looking to live in the Carolinas and you like the quality of life here. So as you prepare for home ownership, it's great to get out a sheet of paper and a pen and begin to ask yourself those questions. Why home ownership for me and why right now? One big thing is that you cannot purchase a home without understanding your finances. So really digging deep into your finances, into your budget. And when you begin to think about that home ownership process, you have to understand your finances. So I am going to drop a nugget, and if we can put this in the chat, to really know your FICO score, and you can obtain your free credit report at annualcreditreport.com. So if you are not familiar with your credit score or you are unaware with what your credit is showing, please go to annualcreditreport.com and you can obtain a copy of your credit report. Additionally, as you begin to prepare for home ownership, and it ties into number 2, you want to begin to save for your down payment and costs associated with purchasing a home. So that's, again, looking at your financial lifestyle, how much money have you saved for your down payment, your closing costs, moving expense. And really, we also want to begin to think about how much home can you afford? And when you get to that point, we like to introduce you to a lender. And a lender can help guide you through that scenario around what is the best mortgage products for you. And some people are paying cash for homes. And when you are looking at paying cash, again, you have to understand your financial situation. But if you are in need of a lender, again, we have guaranteed rate. They are a lender that can help you assess where you are in the financial world and what product fits best for your scenario. So prior to you have understood what you want in a home, you know your finances, and then we get to the point where you want to get pre-approved for a loan. I'm going to pause right there and just make sure that we make a note of pre-approval and pre-qualification are two separate things. Okay. And I see Ms. Desiree kind of shaking her head, I believe. So I'm going to give you a minute, Ms. Desiree, to interject. And can you explain what is the difference between pre-qualification and pre-approval?
Okay, so basically, a pre-qualification is when you present your document and myself, the loan officer, reviews these documents. I pull your credit and I say, you know what, you're credit worthy. Everything looks good. You're good to go. Go out and start shopping with this pre-qualification. Let me reiterate that, my apologies, pre-qualification. So that is when we are pre-qualifying you. It is just the lender looking at your documents, your credit history, and so forth, and they're presenting you with the pre-qualification. Now you have the pre-approval, which 9 out of 10 realtors and sellers and buyers, they prefer. The reason why they prefer that is because we take that information and we take that and put it in front of an underwriter. Where the underwriter reviews this information and they say, you know what, we love this. So now you have something called a conditional approval. So now you're shopping with something called a conditional approval. So basically you've been approved up front before you start looking for the home. And that's much stronger, especially in today's market. In addition, it gives you the comfortability of knowing that everything is good to go unless anything in life changes from the moment that pre-approval is issued until the time that you find your home. So I always tell my clients that it is best, if you have the option, you want to go in with a pre-approval. It helps your realtors, it helps the buyers, it helps the seller. It also, like I said, it gives you advantage points over other people that may be coming in with the quote unquote pre-qualification.
Thank you. Thank you
One
for
thing
adding that. Yes.
You're welcome. I do want to add one point, that one thing that we do here at Guaranteed Rate that I think a lot of realtors and clients should know is that we do a soft pull. So when you do your initial application with us, guys, we're not doing a hard pull. We're doing a soft pull so we can see exactly where you're at so it doesn't affect you. We do not do a hard pull on your credit until you find a property.
That is very important. And when we think, Ms. Desiree, she made a very good point. Everyone likes to shop for homes online. You go online and you look at these beautiful homes, they're open houses. Who doesn't like to look at a very nice home? But it's very difficult for realtors to take you out if you do not have that pre-qualification and or a pre-approval in hand. Just think about it from the seller aspect. Would you want someone coming into your house, into your home that you sleep at night, that is not approved to purchase a home? So it's very important that you speak with the lender to make sure that you have that paper in hand that says, I'm serious, I'm ready, and I'm ready to go out and make this happen. So here are some questions to ask when choosing a lender. And you want to make sure that as you choose lenders, as you choose realtors, as you choose insurance agents, that you get someone that you can trust. And you could ask them, what type of home loans do you offer? Do I qualify for any special programs or discounts? What estimated closing costs can I expect to pay? And what is your average loan processing time? So you want to make sure that you have those questions answered up front so that you can prepare for the home buying process. So those are just tidbits that we want to make sure that you're aware of. And then also ask questions about interest rates and making sure that you trust the lender that you're working with and you trust the realtors and that we are all leading you in the right direction. So when we look at number 4, you have that a pre-approval guaranteed rate has said you are ready to purchase your home. Then we begin to decide what kind of home you want and need. And this is when communication is very important. So I tell my clients, and when we work in the community, you have to communicate what your wants and your needs are. So it's very important to understand your must-haves, your non-negotiables, but also things that you may be wanting to bend on. If schools are really important to you, communicate that. If being near the interstate because you commute to work is very important, please communicate that. If you know that you are a hobbyist and you need a garage for your lifestyle, or you may desire a primary bedroom on the main floor, communicate all of those desires that you would like for a home with the understanding that the lender has approved you for a certain amount. And when you shop for a home, we are still in a difficult market. Our market is improving. If you were looking for a house 3 years ago, during the midst of COVID, we're in a multiple offer scenario where everybody was going crazy. Now the market it's still a great time to buy, but it's not as hectic as it was a couple years ago. So if you found that home that you really like, that your lender has agreed that it fits your affordability, and I want to throw in that word affordability because we want to make sure that you're comfortable with making the payment, the taxes, the insurance for your home. Making sure you still can maintain the lifestyle that you desire, that you have communicated to us, and you're ready to make an offer on that property. And that's when your realtors will negotiate on your behalf. Our role is to make sure that we present an offer that best suits your needs, but also to win that property for you. Once the home is under contract, and again, I'm talking really high level, so if you have any questions, please drop them in the chat. We highly recommend that you get a professional home inspection from a licensed home inspector, and your realtors can guide you on some vendors that can assist you with that. And then once you have that home inspection, then a part of our role as realtors is to make sure that we negotiate on your behalf. Key takeaway, you're not doing this alone. You're doing this with professionals that are here to assist you. Number 8 says apply for a mortgage loan. I don't know why that is number 8. That should be at the very top, number 1 or 2. But again, this is a presentation that we have from our national office. But I want to say there, let's switch that around. You need to apply for your mortgage loan early in the process to make sure that you have everything that you need to get you to the closing table. Insurance. Talk to your insurance provider at the very beginning. Let them know that you're considering purchasing a home, because again, you want to think about affordability, making sure that you're making the right moves. And then when you go under contract, you will discuss the rates for that particular home with your insurance agent. And I'm going to let Ms. Chelsea talk on that later on during the presentation. But insurance is very important in making sure that you have the right person. And then lastly, when we think of just the big picture, we look at closing the loan. It's a great day when you have the clear to close from the lender, which means that everything that they have asked you to do, you have completed that. We are ready to rock and roll. I know if you're online, if you follow any Realtists, you'll see the picture that says, I have the clear to close. You will have a closing day. They'll have their key in their hand. They'll have a sign. They're at an office, an attorney's office, another person that's involved in the contract and the home purchasing process. Everybody's excited. But when that lender says we are clear to close, that means that we are crossing the finish line. There are a couple of things that I want to point out throughout this process. I talked at the very beginning of making sure that you understand your finances. Please don't go out and make any big purchases when you are considering buying a home. Don't go buy a car. Don't co-sign for your mother, your cousin, nor your best friend. Just rock steady for a whole year until you get to that point where you say, clear to close, I'm packing my stuff and I'm in my house. Not close to being in my house, that I'm in my house. So I just make sure that I tell that to all my clients when we're talking in the community. Home ownership is a wonderful asset, but it's also a big responsibility. So with big responsibilities, you have to make sure that we aren't doing things like co-signing for people. We are not going to get a new iPhone every time a new iPhone is released and not paying your Verizon bill. It is not, not paying your car note and they repossess your car and you want to buy a house in 1 month. We have to make sure that we prepare and take those steps to get to the point where you can purchase a home. So I'm going to pause and ask Johnika if there's anything within this high level 10 steps that I have missed.
Well, I did want to point out. Sorry. I told you I was having some technical difficulties. Okay, I'm sorry. I wanted to point. Can you hear me?
Yes, perfect.
Can you hear? I can't hear you.
Yes.
Okay.
Yeah, we can hear
I
you.
did want to point out, like you're saying, as far as talking to a lender, I think even early on, I think sometimes we think talk to a lender when we're ready. Talk to a lender before you're ready. Talk to a lender when you know you're thinking about buying a house. If it's a year or you think you're not going to be ready for a year, 2 years, talk to a lender, talk to an agent, get with somebody, because you want to make sure that you're doing the right things that the lender's going to need first off. But also, you don't want to get there and then find out that you bought a car 2 years ago, but the payment's $600 and your affordability is different. So if you're going to buy the house, wait on the car unless it's the car or whatever, because that's going to affect, and they can talk about that's going to affect your affordability, what you can buy. But talk to a lender as soon as you think you want to buy a house, because next year, I mean, it happens fast. So I think that's one of the biggest mistakes. People come to me and say, I'm ready. Then it's like, oops, I need something else that may take 3 months. And now you're in competition.
Yeah, I like that. That's a great point, Johnika. Can you talk a little bit about how soon, and I know you said at the very beginning, at what point do you think they should talk to the realtist or the lender? Like which comes first?
I think the realtist comes first, because what I do with my clients is, which I love Guarantee Rate. They are seriously, I love their passion. So, however, personalities are different. So a lot of times the realtors can guide you. There's some questions that we don't want to wait. I'm not saying you're going to waste the lender's time, but there's some questions the realtor can answer. And like you said, we all like looking at pretty houses online. And we start looking. A, that house is already gone. B, you can't afford the house, or you can afford the house, But like you said, like if you sleep on it, you won't sleep in it. So talk to the realtors first, get an idea for areas, because you may think that you need 300,000 and you want to be in a certain area, you may need 500,000. So before you start to look and fall in love, talk to a realtors. They can start to get you some information on locations and stuff that you think you want, and then guide you for the right loan officer, I think.
That's great. And I would agree with that. And one of our roles as realtors is to make sure that we partner with amazing professional people in the community that we know, that we trust, that we've worked with, and other realtors as well that are in the industry that understand. And it's a two-way street. I always like to talk about communication. We won't know what's happening in your lifestyle or what are you wanting in your home financially if you don't tell us. So make sure that we're communicating and we're keeping everything open. I'd like to touch on this slide, Desiree, about the 4 C's of credit, just really high level. I know when Johnika and I was looking at it earlier, we said, well, sometimes the 4 C's The words may be different, but we all understand what we're trying to say around pretty much making sure that you are getting your financial house in order. So can you talk to the 4 C's of credit, and then after that, we'll talk about understanding the importance of good credit.
Okay, thank you, guys. So the 4 C's of credit, capital, basically I'm always going to be informal. I'm not going to really follow this if you guys don't mind, but I'm going to
That
still
is
speak
perfectly
points
fine.
of it. Okay. Basically, the 4 C's of credit, I always explain it, is your ability to pay what you're borrowing. So we want to be able to demonstrate to everyone that you have the ability to pay. So if we're going into credit history, we want to be able to show a strong credit history. I like to say 24 months. So we want to have a strong credit history of 24 months. Now, I always explain to my clients that we have this thing called life, and sometimes life does this thing called life. We have to explain what happened during that time. So if we did have some lapse in credit history, what happened? And how can we go into capacity? How can we get back into repayment? Showing that we can pay and maintain credit, showing that we have what we need to pay the collateral and the capital. So in essence, what a lender wants to see, I always say something, how I explain it is your debt to income. I don't like to use bank jargon because a lot of clients don't understand it. So what I like to say is you have a lot of products out here. So if you bring home $1, basically, let's say we have FHA. FHA is going to say of that dollar, we're going to let you use 55 cents of that on housing. We can go up to 55% because we know that outside of that, you have other housing expenses. So we know we have to stay within those ratios with those programs. So when I'm looking at my clients, just going after what you just said earlier, Johnika and Jerrianne, is it's important that you are speaking with your realtors and your loan officer, your lenders, is that we know your story so that we can explain to you on how to, if the 4 C's of credit are not there, how we can start getting those 4 C's of credit, showing that you have capital, money in your savings, 401k and so forth. You have the capacity to pay. You're showing that I have a strong history of repayment and collateral is your home. So those are the things that, I look at and I try to go over with my clients, just to keep it in layman's terms so that we're not, like I said, getting into those bank jargons so that they're understanding. And the biggest thing I say, if you're giving somebody $1,000 just to your brother, you want to ensure to that brother that they have a strong repayment history. Mm-hmm. You're not giving that $1,000 to the brother who is always late, just giving it to you. He wants to pay sporadically. You want something that shows that they can repay. So that's basically that we're looking at the same thing, because this is the largest purchase you're making in your lifetime. So we want to make sure that you are ready to make this purchase and that you don't default. Like I said, because we're here to be your advocate to make sure that you have those things ready.
I wanted to add something. This doesn't apply to everyone, but my first career was nursing. And sometimes people come to the doctor and give half stories because they were embarrassed and so you can't get a diagnosis. You can't get the truth by giving half the story. So I tell people all the time, people come and they got money, mattress money. They got this, they got a situation, and they don't tell us. We cannot help you. Be honest with your loan officer. They're not there to attack you. And so that's one of the biggest issues I see. People like hide things. They're embarrassed. They didn't tell about this. Let us know especially loan officers, let us know so that we can get ahead of it. And then you're not delaying closing, or you're not you're not heartbroken because you didn't tell us that you just co-signed something with your dad.
And I completely concur. I tell people that you think a lot of stuff shows up on your credit report. There are things that show up on title that you may think that we may not be aware of. And then title shows something that you haven't explained to us from the beginning. So like, again, it's just about telling your story. The more we know, the more we can help you, put you in the right product and get you to the closing table on time.
And that's so important, is without the lender, if you're searching for financing, we can look at houses every day. But if the lender says, stop, breaks, this, that, then they hold the cards, because that is how you are truly purchasing the home. So again, open communication. If things are happening in your life, if you have a part-time job, if you receive additional money from different means, please let your lender know that up front so that they can answer the right questions accordingly. So as we go through the slides, I want to make sure that we talked about the pre-qualification, the pre-approval process, finding the right neighborhood. There are City of Rock Hill, City of Fort Mills, Mecklenburg County. If you have questions around crime statistics, demographics, schools, we highly recommend that you go to your local municipality's website and do research that best fits your needs and answer all the questions that you may have to make the best decision for your lifestyle. Again, this is an investment for you and your family. So you want to make sure that you get your questions answered and that you are doing adequate research. Let's see, where are we now? Making an offer. We talked about making an offer here. I'm going to hand it off to Chelsea. If you can just talk high level about the insurance process and purchasing a home and why is it important and really why is it required? And I want to give a real life example about this. A couple of maybe last month, the south side of Rock Hill had a devastating tornado that damaged several residents, including my personal office on Saluda Street. So homeowners insurance is not it's a necessity, it's a requirement. You need it, and it's an additional expense. So when you're thinking about budgeting, you want to make sure that you have the information about the homeowner's insurance and that you're educated. So Ms. Chelsea, our Allstate partner, she's just going to talk about homeowners insurance and the best way to navigate those waters.
Perfect. Thank you. I appreciate that. And that's a really, really good example. I have clients who, like you, had to file claims because of the hail damage to their home as well as their autos. But a couple of things. The first thing is everybody has to have home insurance on their property, especially if you're purchasing a home. If you're purchasing a home, that is one of the steps, when we were talking about having that closing team earlier, that you have to do. That's one of the requirements that the lender is going to want to make sure that you have insurance because they want to protect, your, soon to be asset as well as their, hopefully lending opportunity. You can shop around, good mortgage loan officers. They may recommend some insurance professionals that they work with, but you also have the opportunity to shop around. And one of the things that I would say as a nugget is to shop around for the best bundle rate. Most of us on this call, I would venture to say about 99% of us have autos. And so if you bundle your auto and home, you would definitely get the best rate. So make sure that you try to do that. And I know, when you're buying a home, been there, done that. When you're buying a home, you're focused, locked in on that home because there's so much asked of you and, you have deadlines and things like that. But do take the time to get a bundle rate so that you can get the best price. Also, 3 things that you want to pay attention to when you are getting a policy. And some of them are up here in the bullets, but I want to highlight 3. Liability. Make sure that you get good liability. The rule of thumb, you should have 100,000 per however many people live in your home. I would say on average, if you at least get 300,000, that would be great. And liability, let's say you have some guests over, you have a housewarming party, you have guests over, someone comes to your home, they have an accident, they slip and fall, break their arm, and they hold you liable for that. That's what that's going to cover. So it'll make sure that it covers those claims as well as your insurance company. They'll pay for your attorney fees. Loss of use. Let's say, God forbid, but there's hail damage, making the home unlivable, or there's a fire, or there's theft to the point where, it's not even livable right now until it gets repaired. You want to make sure that you max that out, that loss of use. That's going to give you money for expenses that you're going to have living off site. So you want to make sure you have coverage there. And then another little nugget that I want to give you all is, do know on average, I've seen this as I quote homes, daily. Older homes are going to be typically a little bit have a higher insurance premium because, they are older. So parts, labor, you got to kind of bring them up to today's time. And then your newer homes typically have a lower premium because, it's new, right? Everything should be that it's just gone through inspection, got new product, new building supplies and things like that. So typically those premiums are a little bit lower. I just wanted to put that out there because some people, you might be shopping for a new build or you might be shopping for an existing home. So just know that they will vary in price. Any questions so far?
Chelsea, I have a question.
Sure.
Does interest rate play a part in your quote? I mean,
No,
I'm sorry. Does your credit score play a part in your quote?
yeah, interest rate doesn't, but your credit score
Not interest
does.
rate. I meant to
And
say credit score. I'm sorry.
yeah, no, great question. I'm glad you highlighted that. So credit, we too, I believe Desiree mentioned this about a soft credit. We too pull a soft credit and not just for home, but for autos as well. Your credit does impact. So in autos, your credit as well as your driving history. And then on the homes, your credit as well as your claim history. So, some people, I would say typically, people who are looking for homeowners insurance, they're either buying a new home, a new construction, or, a home that's already, a pre-existing home, or they're looking for a new rate, or, unfortunately, they're not going to be renewed. I just had this yesterday, was able to get a good friend insurance because her current insurance company, they dropped her just after one claim. So in today's market, I will tell you, insurance companies, I know that, some have raised their premium rate, but they're being very extra cautious on claims, and they're looking at trends. Are you somebody that's always filing a claim, even though you say, okay, well, that's what insurance is for, but then that comes with higher risk, right? And so they want to try to eliminate that risk as much as possible. So what I always tell my clients is before you file a claim, and I'm going to use the example of the hail that we had in Rock Hill. My client, didn't really know what the extent of the damages was, just knew that her roof had some, heavy noise and it probably had some damage. And I told her before you file a claim, before you call our claims department, get someone to inspect your roof to truly make sure you indeed need to file a claim. Because once you file that claim, it stays on your file for a couple of years. And so you just want to make sure that you are truly using that insurance on an as needed basis. Any questions?
Okay. I'm sorry. The reason I pointed that out is because I think all of us professionals here, not only is it important for you to buy a house, but personally, most of us want to see you keep that house and stay in that house. And so knowing that the insurance rate may or may not go up, because some people have their credit good enough to buy the house and then they let it go to poo.
Mhm.
And that can cause an increase in your monthly payments if your insurance increase. So I like to point out the importance of not just having good credit to purchase the house, but continuously keeping good credit so that you can keep the house and not put yourself in a position to have higher rates that increase, because they'll increase anyway, but you know what I mean?
Absolutely, absolutely. Maintaining good credit so that all times when you need it, right, as you're shopping or to maintain to your point, you can get the best rate possible. Credit is just, it's essential. You have to have it. And so that's a really good, call out for that. And then also too, there are going to be times where it's not about your credit, but it just might be the rates in your state have adjusted across the board. And so there might be times where, South Carolina, North Carolina does, again, this is across the board with the Department of Insurance, that carrier, whether it's Allstate, Progressive, whomever, they have to raise their rates because the state raised their rates. And so, like Johnika saying, that might impact your mortgage. And so you just want to be vigilant, look at your mortgage, always take a look at stuff, get an annual review on your insurance. That's essential. I would definitely say if you remember nothing else, always check your rate. For autos, I would say every 6 months. For homes, every year at minimum, look to see what your rate is and, call your agent, see if they can review your file, give you a review just to make sure that you have the best rate possible.
That's a great point, Chelsea, and I'm gonna put that in the chat. Always check your insurance rate, because Johnika said something that was very important and we didn't highlight in the beginning. So thank you for bringing that to light. We want you to get a house, but we want you to keep a house.
Amen.
And that's very important. When I started in the industry, I started in 2008, and you know how the market was in 2008. So we want everyone to truly use home ownership as a builder of economic wealth for your family. And that home over years would appreciate and provide you more stability for other things that you would like to do. As we talk about credit, and it was a question around that, Desiree, there's a question in the chat. In regards to credit, if you have things in collections, would it be better to try and pay it off or build more good credit?
That's a great question. This is when you want to tell the story. So as I mentioned earlier, this is when you would submit an application and I would pull the credit and I would review the credit. And from there, I can tell you what you should pay off and what you should not pay off. Because in some instances, we think, hey, let's pay off ABC because I've been past doing them and they went into collections. And we'll find that sometimes paying off that collection account can hinder us instead of helping us. So we want to look at the full scenario because in some instances, it doesn't, we have something here at Guaranteed Rate. It's called the What If Simulator. So what I do is if I have a client that comes in and we have to do something called, I call a future plan. They're not ready today, but we're trying to get them ready for 3 to 6 months from now. I'll run the What If Simulator and it makes me aware of what you should and should not pay off, or it's going to guide me in what you need to do. I.e. example, okay, let's open a new credit card and let's just put a small balance. Let's pay off this account and this account. And it will tell me in 30 days, this is what your projected score is. So this is why it is important to speak to us before we start making these decisions, because sometimes we'll make these decisions and we'll come out with the 620 and we're like, okay, why do I have a 594? I've done everything. I've taken my savings, I paid this, because sometimes we just didn't know the game plan. So this is what we're here for, the advocates, to tell you the right direction so that when you are paying off these balances, you know who to give what to and how to give it.
That's good. Ladies, if you don't mind, I want to jump in. I forgot 3 other things real quick.
Mhm.
Life insurance, right? So we're talking about, making sure that you have a good policy to insure your home, but also consider life insurance because God forbid, but if something happens to you, right, or your spouse, as we talked about keeping the home, you want to make sure that, whoever are depending on you, if it's children, if it's parents, older parents, that they could continue to have that home, especially if you've been in it for 10, 20 years, you make memories, you want to make sure that it stays in your family. Look at life insurance and get enough coverage that if something happened to you, critical, I don't want to say critical illness, but let's say you're not able to bring in income anymore, due to, something tragic happening. You also want to make sure you have life insurance. That way that policy can help pay off your home so that you'll have money to take care of that. The other thing is, make sure, prior to working in insurance, I got my policies online. Like Jerrianne was talking about, we like to look at homes online. I got my insurance online. I never talked to an agent. When I started working in insurance, I quickly realized, oh my goodness, I wish I would have had an agent, because the agent can tell you things about insurance that you may not be aware of, because when you're just doing that quick shopping, you're just, trying to focus on price. Maybe, you're just looking at trying to get a lower rate on your home insurance. You're not thinking about, not all the time, life insurance or an umbrella policy or getting in reviews or making sure that every, piece of your puzzle is covered. So make sure you have an agent. That's super critical to set you up for success. And then the last thing I want to talk about is the umbrella policy. If you're somebody that like to have toys, if you have a pool, anything that can expose you to more liability, you like to go boating, you got a golf cart, you have, a pool, you may have a small business, there's a potential that some defamation, that's something, we're in the social media age. You might have said something online and pissed somebody off and now they want to come after you. Or, let's say, God forbid you had guests over, they had an accident at your home, right? And they want to file a claim on your policy, but let's say you got the minimum in liability. You only got 100,000, but their physical damages are 200,000. They're going to come after that gap, that 100,000 gap, they're gonna come after that, and that's where umbrella policy will kick in. It will give you additional coverage that's beyond what's on your policy. Because at the end of the day, you do not want your wages garnished, which can happen. You don't want anything like that to happen. You want to always protect yourself. So definitely consider getting an umbrella policy.
I like that, Chelsea, and I thank you for adding that, because oftentimes when we think about home ownership, we only talk in one avenue. We're only driving down one road, but that's not true, especially when you think about your life insurance. And for some reason, the minority community is afraid of insurance, afraid of wills, afraid of just making sure that we have our affairs in order. And because of that, oftentimes in our community, predatory practices happen because we are not prepared and we don't have these trusted resources to lean on to get information that's needed. So I think that's a very valid point, to make sure that you have an insurance agent, that you have a realtor, that you have a lender, that you have an attorney, that you have an accountant. So when things happen, you are prepared and not surprised. So I want to make sure that we leave time. It's 7:18, and I believe in starting on time and ending on time. So do we have any additional questions? If someone would like to come off mute and or put it in the chat, we want to make sure that we leave time for you to answer any question, ask any questions that you may have.
Yes, I have a question. So if you've already purchased a home and say like the interest rates are fairly high and you're expecting the interest rates to drop, is there a certain amount of time after purchasing a home that you should refinance? Like, would it hurt you to refinance, or can you refinance within like the first year?
That's a great question, Ms. Desiree, if you don't mind answering that question. But I also like for you to address the you expect interest rates to drop part as well. Because I don't know if the expectation is realistic or that's just like the word on the street. So if you can answer both of those.
Look at Sahad. Sahad had to come in for this one.
Yes, for this one, right? That's a great question. So firstly, yes, you can do a refi in the first year of you purchasing your home. And always tell people that your situation is different from everyone else's. So again, this is when you come to a lender and it costs you nothing to see if it's advantageous to you to do a refi. The reason why I tell people that it may be advantageous today to do a refi is because you have something called blended rates. And what I call blended rates is you have a home that you purchase and you have credit card debt. You may have a home equity line. You have all of this that you're paying, and overall, you'll never pay all of that off in your lifetime. So you can take all of those debts and consolidate it, even though the interest rates are higher than what we like them to be right now. You take all of that debt and you consolidate it under 7%, let's say, that's just giving you a number. You'll find that you can save substantially a lot of money on debt because you're eliminating that credit card debt. Credit card debt is anywhere between 14 to 29%. And if we're still utilizing those credit cards, you will never pay them off. So like I said, it's up to each one story to see if it's advantageous for you to refi. Even though you may be one of those people that had a low interest rate during COVID, looking at your whole overall picture is to help us to see if it makes sense to refi. Now, Jerrianne, going back into your question where you put me on the spot, right? Do we anticipate seeing interest rates going down? The feds are saying that they're going down. We're fortunate that we didn't have a rate increase in June, that they stayed the same. However, I'm always going to be transparent and frank. We're coming into election season. So we're going to see that fluctuation where they're going to go up and down. But what I tell my clients is we're marrying the house and we're dating the rate. That's all we're doing. Once these rates come down, we're going to look at, again, you doing a refi. If you have clients, this is my biggest thing, and this may be something that alarms people. I tell people, I don't sell rates. I sell you affordability and what you can afford to pay. Let's look at what you're paying today compared to what you're going to be paying tomorrow. Because again, we're not marrying this rate. We're just going to date it. And once they come down, we're going to change your situation. So let's not look at that. Like I always tell my clients, when we're looking at interest rates and we want that brand new car, we didn't say to auto dealer, how much am I paying? How much is the rate? We look at the payment. We like 460, we're okay. We don't know. So I always say that when you're purchasing a large purchase of your house, sometimes it may be a little bit higher going in, but your overall is going to be, this is your personal piggy bank that you can come back to. So I just, that's just something, like I said, I'm always passionate about that. That's where my passion lies, especially with interest rates. So again, we can't foresee, but right now they are, like I said, higher than what we want during COVID. But again, if you are renting in North Carolina, we have no rent cap here. So what you're paying today is not what you may be paying when you sign your lease again. It may be $1,600 this June. When you go sign again, that same apartment, nothing has changed. You're going to be paying $2,200. And you may be able to afford a home and your overall may be $1,800. So I just, let's not even look at the rates. Like I said, let's look at affordability and what you can afford and making sure that we don't give you a payment shock. And I see my partner with the hand up.
I know I was like, Sahad has her hand up.
So to just touch on interest rates. So the first question was, are interest rates going down eventually? Do we have a time frame on when the interest rates are going down? The true answer is no, we don't. A good rule of thumb is that interest rates, contrary to what you see on the news media, is that interest rates follow inflation. So if the cost of milk and eggs are through this roof, the interest rates are probably through the roof too. When the cost of eggs and milk go down to a reasonable price, interest rates should too. And I know that you've probably never heard that, but interest rates follow inflation. For refinance time frame, you need to stay in your property depending on your mortgage type for a minimum of six months. If you are a veteran and you do a veteran loan, you have to stay in that home for at least 210 days after the first payment on your mortgage. So VA, 210 days after the first payment on that mortgage loan. FHA is about 6 months, and then we have what's called net tangible benefits. So with all guidelines, if there is an extenuating circumstance of why you need to refinance a property, everything can be discussed up front. So for example, your family size is going from just the two of you and you live in a 1-bedroom house to now it's going to 3 because your partner is having a set of triplets. That's an extenuating circumstance which may allow you to get out of the mortgage, or if you have to do a refinance. There's lots of different scenarios like that. If you use any type of down payment assistance or special financing, there may be restrictions on when you can refinance. Every state, every county, every lender may have a different set of requirements on when you can refinance if you use a specialty program or down payment assistance. So the answer is you are supposed to stay in the house for a year, 6 months at the minimum, but there's always ways around it. If you did down payment assistance, you need to make sure that the requirements for that down payment assistance program do not restrict you from refinancing your house. That's all I had to say about that.
This is why you choose a good lender. But I was going to ask you a question anyway. I'm sorry, Jerrianne. I was going to ask Sahad because she's like my spirit animal and I love her. I was going to ask you 2 questions. Since the Roberts and Dexter and Cal, they don't want to ask any questions. No, I'm just playing. But so for people that own a house, like he asked about refinancing, you have people. 2 questions. People that saying, I don't want to buy, like I need to buy, I want to buy, but I want to buy because my rate is this. What do you say to those people? And secondly, so the people that don't want to move or, move on because the rate is so low. And then the buyers that saying, hey, I'm going to wait until rates go down. I'm going to wait until this happens. What do you say to them people?
So let's start with the buyers. So if you're waiting on interest rates, hold your breath, okay? Because you could be waiting a long time. The other thing is that if you are ready to buy a house and your budget for your family makes sense for you to purchase a home versus continuing to rent where you have no set payment, it is guaranteed to change. One thing for sure, and 2 things for certain, rent is going up. No matter what, it's gonna go up. So if you are, I want to wait until rates go down. What you're really saying is, I don't want to start my process and see what I qualify for right now because you're waiting on something better and it's not happening. It's not going to come. You are the only person that has control over your budget and your spending. So maybe a higher interest rate means that you can't shop online anymore. You can't go out to eat 5 times in a month. You might have to change your personal budget in order to accommodate your house. What I also say is, if your car stopped working tomorrow and you needed that car to get to your job, you're going to go and get you another car, no matter what the interest rate is. You have to think of that for your family. I put this roof over my family's head. No matter what that rate is, I have to put a roof over my family's head. Okay? Because if I don't have a roof over my family's head, where are you living?
But Sahad, the market is about to crash.
The market is about to crash. Who told you that?
Well, that's one of the main things I hear. So tell me, that's people are saying, I'm just waiting. If they're not waiting for interest rates, they're waiting for the prices to lower, or they're waiting for the crash, because we remember what happened last time.
Well, you know what happens in a crash? The same people that had money today are the same people that go and buy their houses when the market crashes. So if you are not that person that has a whole bunch of cash to go and buy, whether it crashes or not, what does that got to do with you? Your buying process is unique to you. And if you're waiting for something else to dictate if you should start your process, right, then maybe you don't really want home ownership, because the housing market crashing doesn't benefit you. It brings out everybody else who's been sitting on the sidelines waiting to purchase. Guess what? They were waiting too. You know who else was waiting with them? Commercial buyers, private investors that are buying in cash, big business entities that are buying up whole communities in one sweep. They're waiting too. So what are you waiting for? That's what I would say to buyers. For sellers, the biggest thing is, what is your budget? If you are on fixed income, or if you're making the same amount of money, you really need to look at, what is our budget? Can we change our personal budget to make room for a new house? Because the old rate ain't the new rate, right? You know that the monthly housing payment is going to be more. However, if you have been in your property a long time and you have a lot of equity in it, you may have the cash that you need to purchase a new home, to help you with buying down your interest rate to where it's more affordable, putting a larger down payment on a house so that you're only borrowing what you can truly afford, and you're creating that budget for your family. If you own a home and you are contemplating selling because you don't know where you're going to go, your first step is talking to a lender. This is my income. This is my financial situation. What does it look like if I bought today in this market? Everyone has to get it out of their head that we're going back to an old market. We're going back to the pandemic. The world had to be in complete despair for interest rates to hit 2% and 3%. It's never happening again in our lifetime. It's not. Get over it. It's not happening. It's not real. It was an anomaly. They had to do it. So that's not realistic. It's not going to happen for you. And then anyone who is sitting kind of like on the fence, waiting for better, when you stay ready, you don't have to get ready. So if you don't know where you are right now, with rates being where they are right now, okay, you haven't started your process to get ready. When you stay ready, you don't have to get ready. So that's what I have to say is, if home ownership or purchasing property is something that you want to do, you need to know where you stand right now as if you were going to do it tomorrow. Don't worry about what the rest of the world is doing, because they're not helping you put any money towards your transaction. Focus on you.
Say it louder for the people in the back.
Way back.
No, we're like,
Way to the way back. Thank you. And I think that is a great closing. And I think that's very important. We started the conversation with making sure that you assess what you need for yourself and for your family. And I think, Sahid, you said it wonderfully. Understand what you need for your family and get to moving. Can't nobody tell you that but you. So in closing, Desiree, if you can put in the chat if any of the buyers are wanting to apply for a loan, what's the first step with meeting with guaranteed rate? That would be really helpful. All of our guest experts We have added our contact information in the chat as well. If you would like to jot that down, this recording will be online on our Facebook page. So please share it when it is available. And in closing, Brothers of Phi Beta Sigma, do you have anything to add or anyone else?
Hey, I just want to quickly thank everybody. My name is Rob Keith. I'm actually the president of the Rock Hill chapter. This is an outstanding program, a lot of great information. Like I said, just thanks Jerrianne and thanks other members of the association. Like outstanding information, and definitely would love to do this at a later date from other people. Just kind of continue to get this information out to everyone. Thank you again.
You are welcome. Whenever you need us, you know where to find us. We really
Definitely.
want to make sure that we educate the public. And the next go around, I think we should delve more into insurance and wills and making sure that we are having our affairs in order, along with making sure that you purchase the right home for your family. Everyone have a blessed night. If you have any follow-up questions, Johnika and I will hang out in the Zoom room for a minute or two, but if not, we will see you next time. Thank you.
Thank you.
Thanks, everyone.
Thank you.
Thank you.